Hey everybody, it is Brian Shannon from AlphaTrends.net. Today's Friday, the 7th of October, and we had a continuation lower here today. Got hit pretty hard. For the week we were still positive for the SPY, although we went out right at the year lows. So, negative this week, of course. And when we look at the charts, there was nothing constructive going on there outside of energy, which the energy stocks were up 13.5%. Beyond that, the Dow was up 1%, Russell up 1.27%, but we're still in downtrends here, and you can't expect a turnaround all at once. This is a 15-minute chart of the SPY, and on here we have the purple is the volume weighted average price anchored to the Fed. We're back below that. We have the orange 5-day moving average, which we had been holding above, but we gapped below it, and by the end of the day, it's now dragged lower again. So heading into next week, I think you have to look at if we head up into this area where we see those three important things, and the green is the volume weighted average price from the year-to-date low, which is where we went out, of course, last Friday. This has the high potential of becoming resistance next week. Now, if instead it is somehow able to get back above there and hold above there, then perhaps it can turn around. But last week we were talking about the 200-week moving average and how it was not obvious that it was a buy. That in fact that the 200-week moving average, the value of it on Friday was at 358.16, and we saw that market drop down to 350. What was that? 357.11. I thought it went lower than that, but either way, it wasn't an easy purchase there. But the fact is that the market remains in a primary downtrend. We made it up on the daily time frame right to the declining 20-day moving average, and I was pointing this out. I think I might have done it on Wednesday. That touching the 20-day moving average doesn't mean we're going to decline, because we had seen earlier this year one instance where it got up to that 20-day moving average and then had a little bit of follow through, but only to fail after that, simply because we still have had a declining 50-day moving average. We still have a 200-day moving average. We're still in a bear market. Let's look at the weekly time frame just to gain a little bit more perspective, and let's just look at there's that volume weighted average price off of the COVID low. There's the volume weighted average price from the 2018 low, which is more relevant. I'd still like to see that tested and undercut before we have the potential of a turnaround. The market doesn't care what I want, but odds favor that, certainly, with a declining 20, 30, and 40-week moving average and a declining 20 and 50-day moving average as well. So, the path of least resistance remains lower. There were a lot of people calling a bottom on Monday and Tuesday because we saw a rally. And as I told subscribers, as long as we stayed above this level, it had a fighting chance of maybe building out to be a bigger rally attempt. But because we broke below that today, and that was the 5-day moving average as well, as soon as it did that, the sellers regained control, and buyers puked. Short sellers leaned into it, and the path of least resistance on all time frames continues to be lower, including here you can see this purple line is today's daily volume weighted average price, which is still declining. If you're watching this on YouTube, please give it a like, share it with your friends, leave a comment. I generally answer all the comments there. So if it's a negative comment, I just delete them. It'll never be seen. All of your little spam bots telling me how you're making $25,000 a week with some crypto guru. Anyways, the point is the market is still in a downtrend. The Nasdaq didn't make a new closing low, but it sure as heck came close to it, and we're still right at that volume weighted. I'm sorry, the June low. I don't know what happened to my volume weighted average price from there, but it really isn't relevant here because it's so far up above the market. This market, the Nasdaq, also stalled out right at the declining 20-day moving average. When we look at a 30-minute time frame, let's actually go to the 15-minute time frame. You can see here's our volume weighted average price from the CPI, and we found sellers in that general area. Today, again, this was the same level. I said if we can hold above here, then perhaps we can rebuild for next week. But that big gap lower and continued selling throughout the day, there was no opportunity to buy the dip in here today. Even looking at the very short-term time frame, if you want to call these successful rallies and buyable, tradable rallies, then you're clearly on a much different time frame than I care to implement my ideas on. Especially when we see, you anchor the volume weighted average price from the beginning of the day, and when the sellers show up there, it tells you a very strong message that the sellers are here, they're defending that level, and they're aggressive. So we anchor from there, and it didn't really give us much value. But the point is, we're below a declining volume weighted average price. Why make it difficult on yourself trying to be the hero to pick a bottom? There's just no point to do that. We are very close to a new closing low on the weekly time frame here. Only closed lower last week. When we look at this weekly time frame, I think I have it actually on here. There's the 200-week moving average, and so now we've closed below that 2 weeks in a low. So there's no magic to that, just as there was no magic to it back here in '09, where we spent close to a year under the 200-week moving average. So just because it's been important in the past doesn't mean it will always be important. The volume weighted average price from the 2018 low, when we anchor it there, we're below that, of course, as well. The next biggest level is down here. In between, we could look at maybe that volume weighted average price and say 240. I had posted on Twitter, and again, if you don't follow me on Twitter, you're missing a lot, that I thought Tesla had a strong likelihood of coming down to this volume weighted average price. This is where the stock broke out. At this point, it broke some resistance in 2020. So we anchor a volume weighted average price there, and you can see these circles where it had been touching it. I had posted that, I believe, on Wednesday, where the stock was 20 plus points higher. So this is a potential area where Tesla might get a bounce. I'm not looking at it as a place for a low, for a turnaround. I think that Tesla's in big trouble here. If you take a look at the volume weighted average price anchored to the COVID low, that would imply that we still have about the potential down to 184. I think that's still quite likely. It's never a straight line. Maybe it will be this time, but I think it's more likely that maybe Tesla would come down like this, rally up, make a lower high, and then get to that level. And there's nothing to indicate that it will hold there. Just like, I spoke about Intel recently at this trade show in Las Vegas last week. And in Intel, you look at it from the really long-term picture. Let's actually look at the daily first, because once again, we're still, we get these little bounces that get people all excited, but we have a declining 2050, and that's not even Intel, INTC. But we had the same thing happen. We had this little rally. It got people excited, and another new closing low. And when we look at the monthly time frame, look at this. We're going all the way back to the breakout that occurred in 1995 right here. That's where we started that purple volume weighted average price, and we're still not finding buyers there. And people are looking at it saying, well, it's a 3.9% dividend. Well, you lose 3.9% on a day like today. Today, the stock, where's the percentage on here? I know it's on this. It was down 3.37%. So there goes your whole taxable dividend in one day. It just doesn't make sense to buy these stocks in downtrends. I was on a Spaces last night, and there was someone who was very smart about the fundamentals of Intel, and he was making a case for it. Fortunately, he hadn't purchased it yet. He's watching it to become a potential leader, but the fact is, just don't fight price, don't fight trends. I had somebody tell me back over in here, I love Intel. It's my biggest position. I don't give a damn about the chart. The chart doesn't matter to me. It's a great company. I said, well, good luck, but this it's done nothing but pretty much go straight down since then. And the point isn't that I'm trying to be right. The point is, it's a simple matter of listening to the message of the market. When the 20, 30, 40-week moving average are declining, you've got no business buying the stock. It means the institutions are selling these stocks, and you can look at them. In Apple, it's in a downtrend, most likely headed to 133. AMD, a garbage stock here all year. Amazon, not even, barely holding on. ARC, don't even get me started. Coinbase, terrible. Generac is one that should be going up. It's not, but it's based on fundamentals and hurricanes and that. They're just bad stocks to own. Google, terrible stock to own. No reason to buy it. If they don't scare you out, they will wear you out. I've been saying that every week pretty much since the beginning of the year. The Russell 2000 is still holding above the volume weighted average price from the 2016 low. If you call that a victory, well then great. I just see it as it's trying to find, it's showing a little bit of relative strength. But as I always point out, relative strength in a downtrend means it's just a less smelly piece of crap. It also found supply at the declining 20-day moving average. It seems inevitable that it'll test and break this low. I am not impressed with the action in there at all. Semiconductors got a little bit of a bounce, but look at how badly they got hit today. Just terrible action. You can't buy this stuff in downtrends. It broke below the volume weighted average price from last week, and even if you hadn't gotten out, prior to that, you got to get out in that first 5-10 minutes as it makes that new low and not subject yourself to this. I know it's difficult to do so. I've been there before, but when the overall trend is lower, you've got to be extra quick to say, I'm cutting, I'm out of here, I'm going to leave this to be somebody else's problem. There is no reason to own stocks in downtrends, and that continues to be the case. You can draw VWAPs and say, look, it's right on it. So what? It doesn't mean anything. As I've pointed out, it's no different than saying, hey, a stock's at a 12 PE. That's an indicator. It's not a signal to buy. We have indicators to tell us it's time to take a closer look at a shorter term time frame to see if there's evidence that the buyers are gaining control. And there is no evidence, so there's no reason to buy these types of stocks as they're in downtrends. Without a signal to buy and a low risk place for an entry, it's just a level of interest. I said that a little bit more passionately on Wednesday, and some people, thought I sounded angry, and I was actually in pain. That, probably physical pain, so that came through. I apologize if I offended anyone, but the passion was there and it was real. In that, just don't buy stocks in downtrends. I'm saying it passionately because I hate to see people lose money doing dumb, uneducated things. The biotech seemed like maybe they were going to be able to hold on up above this level, but they fell back down through. There are times when we look for evidence that buyers are gaining control, and getting back above that level, that was important. That got me interested in thinking maybe they can outperform. But did they outperform? You see this line right here? I drew this in Friday night or Thursday night for subscribers to tell them, here's a potential scenario. Well, we got the pullback down here, but no bounce. So it didn't hold this level, so there's no reason to be a buyer. It is in a downtrend. Let's look at the volume weighted average price from the recent low in here for, let's look at it on a 30-minute time frame. So for the biotech, since they made their year low, we're right on that volume weighted average price. And it's been defended successfully a few times. So here's what I think is most likely, because the primary trend is lower, is that we do something like this. If this happens and we come back down and break that volume weighted average price next week, I say lights out for the biotech, short them here with a stop above there. If instead it does something like this and is able to hold on, I'm not a buyer yet because we have trend lines to deal with, downtrend lines to deal with. We have downtrend moving averages. We're still in a bearish environment here. So the more likely scenario, as I just pointed out, is something along the lines of this as a breakdown. We have to go with what's most likely, not with what we want to happen. Let's talk about the energy names. They came back super strong this week. I pointed out a couple of things. One, they made it through this downtrend line. That was a level of interest. I pointed it out and said, here's where we have the potential for supply. I said I wouldn't be surprised if we get through that and instead go on to test this peak right here. This is what we tested. We rallied up through it and we distributed a little bit. So, some people were probably buying because it was above here, calling it a breakout today. Always ask yourself, where has it come from? It just rallied from 69 to 82. That's a huge percentage move in just 10 days. So what's most likely? Probably a pullback in towards this area. Then we see that 20-day moving average and the 50-day moving average come up like this. Don't buy the pullback if that happens. Instead, buy it as it starts to emerge from here. Buy it right here. Let's put a circle on that. Buy it here with your stop then below the most recent relevant high or low. That's the way to trade these things. Don't let FOMO get in the way and say, hey, it's up 14%. This is the winter. The shorts are getting squeezed. OPEC's doing this. And, Russia and China are colluding with Saudi, or whatever the story may be. Only price pays. Thanks for tuning in. Have a good weekend.